Attention A1 Trading Show fans. If you're interested in getting free access to the edgefinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, everybody, welcome back. Good morning. Hope you're doing well. Let me fix my camera. I am from home today, as we all are. Bit of a crazy week for the A1 Trading crew. Several of us are actually headed out of town for our very own Julie's wedding, which is my sister, who also heads our marketing. So we're going out of town for the week. Actually, it's going to be kind of a hectic week, but some notable members of our team will be sticking around, however, to keep the show alive. We got Chandler and James, and Frank will be around. We got, of course, Chris Pulver, and we got a whole cast of characters that are going to keep the show running while I'm away. But just wanted to give that as a bit of a PSA for regular stream viewers. I know it's not the ideal week for me to step out of the picture because, of course, it is the week that we expect the first movement from the Federal Reserve, but it is all good. It's we're leaving you guys in great hands. We got lots of different people. I'm here today, though, so I wanted to just give a bit of an overview of where I am in the markets. Can you guys just do me a big favor and just let me know, sound-wise, are we okay? I want to make sure. Sometimes when I stream from home, my at-home setup is not as refined as my in-office one, where we've got the whole trading rig and live stream setup and all that. So hopefully we're good. But yeah, Pepper in the chat says all good. Thank you. All right. So I wanted to give you guys a little bit of a run through on my thoughts as we go into this week, just because it's a tricky week. The Fed is expected to cut interest rates. And I don't know if you guys have been seeing this, but look at this right here. If you don't know what you're looking at, let me explain it in simple terms. Basically, we actually saw a big swing in favor of a 50 basis point cut on Wednesday. What the heck is a basis point? Basically, it's a fancy way of saying a 0.5% reduction in the Federal Reserve, which is the central bank in the United States, their lending rate or their borrow rate. So we see a shift now heading into the week. I would not expect this, guys. I did not expect such a big shift on the very week that we're expecting interest rate cuts from the Federal Reserve. I did not expect us to shift once again from 35 basis points to from 25 basis points to 50 basis points on the week of the cut. Now, we don't know if this is going to happen. 65% chance. This is just a chance, right? We may see a 50 basis point cut. We may see a 25 basis cut. I've made my opinion on this pretty clear. I do think that we're going to get 25, even though now it has become the less popular decision or opinion. I still kind of think we could see 25 basis point cut. And we have to think about what this signals. What is this telling us? If the Fed goes out and they say, oh, we're going to cut 50 basis points. The thing is, if the stock market wants to rally, it's going to find a way to. They might say 50 basis points, this is going to really relieve pressure. Sectors that are under pressure from high borrowing costs, they're going to rally hard and the market's going to rip. So there's always a bull case to be made, to be fair. But let me give you the bear case. And I'm not a bear, but let me give you the bear case, which is if they cut by 50 basis points on Wednesday, 25 or 50 is nothing. It's not going to do a huge amount in the short run. It's more about what it signals, right? If they cut by 50 basis points on Wednesday, what does that tell us about where the Fed is at? It tells us that even though the economic data seems to be coming in decent, the Fed may be a little bit concerned that the deceleration in the economy could accelerate. Like the slowdown in the economy could accelerate. That, in my view, the CNBC bulls are going to say something otherwise. They're going to say 50 basis points, this is just relief. We're going to see a rally. I would caution that thought because, again, a 50 basis point cut to me signals the Fed is a bit weary about what could happen to the economy. Now, let me kind of throw another idea at you. If we get 25 basis point cuts, a 25 basis point cut, you could just flip that argument. That's the tricky part about this. You could say, oh, this is not going to provide enough relief for parts of the economy that are more sensitive to rates, right? Real estate, technology, borrowing cost heavy utilities, things like that. It's not going to provide as much. But you could also make the case that the Fed feels confident if they do 25. And I actually think, again, I'm now not in the popular crowd on this thought, but I think that this is the more likely scenario that the Fed will go with. Jerome Powell, who is, of course, the chairman of the Federal Reserve, has been pretty consistently slow to, he's not one to make quick, decisions or jump to conclusions quickly. That being said, it is a committee. They make a decision together. So I'll tell you this week, I think we see 25 basis point cuts, but I'm not a fortune teller. I could be dead wrong. That being said, I'm going to go into this week with my best judgment pointing towards a 25 basis point cut. Now, what does that actually mean? Well, if the market's getting kind of pumped up on the idea of a 50 basis point cut, it may not be too far-fetched to say, well, if we only get 25, there may be a little bit of hope that kind of gets slashed with that idea, and that perhaps Fed rate cuts are not going to come, piling in, and may cause a short-term reversal in the stock market. We've got the NASDAQ sitting kind of at resistance here, right along this trend line. You got the SP500 right at all-time highs. It's possible that if they come in with a 25 basis point cut, you may see the stock market lower in the short term, the dollar higher in the short term. But I'm going to go out and say that this is my game plan for the week. If I think if I'm right and I get what I want this week, which, doesn't matter what I want, but if I'm right, if a 25 basis point cut happens and there is some hopes that get slashed and cause some dips in the market, I'm a buyer. Okay. Because I actually think that a 25 basis point cut would signal confidence. It may slash some hopes for rate cuts, or the rate cut junkies might come running in the short term, on the idea of 50 basis point cut. But I would like to see the market see a bit of a pullback on the thought or the fear, oh my gosh, we're only going to get 25 basis points. I actually think that would be the better case for the market. I think that would be more bullish. Does it mean I'm bearish if we get 50 basis points? No, in fact, if we get 50 basis point cuts, I have to look at the Russell even closer. Here's a look at the Edgefinder's current top setups algorithm. We've got the Russell here on the bullish side. We got the Dow Jones on the bullish side. We got copper, silver, dollar CAD, euro CAD, platinum. We got some readings this week, which is exciting. We finally got something to look at here. On the flip side, we still got Nikkei bearish, Aussie Swiss bearish. So, where am I most interested? Well, I got to say, I'm watching the indices very close this week. So if I'm taking a look at, the Russell, right? Here's the Russell. We've got some levels of resistance here off of the daily chart. So you've got resistance here, resistance here. So if you get a 50 basis point cut, the Russell's probably going to rip, right? The Russell's probably going to say, heck yeah, we got the rate cuts. We're going higher. And the Russell might have a breakout this week. That's very possible. If that happens, if you get 50 basis point cuts, I'm going to be very convicted on the Russell. I'm going to be looking for pullbacks. I'm going to be looking to buy into that strength if we get a 50 basis point cut. And if we get a 25 basis point cut, I'm going to watch things like the NASDAQ. And I'm also interested in the Dow Jones. Look at the Dow Jones, by the way, confidently testing the highs as we speak here, guys. This is US 30 Dow Jones, whatever you want to call it. The Dow is right up near its all-time highs. If we get something like this week, I'm a buyer. I am pretty much bullish across the board on the indices. And if I sound different than I did in the previous week, it's because the Edgefinder has flipped a little bit. We had good inflation data. That's hard to fight, right? We do get retail sales numbers tomorrow, which could flip things, a little bit around if they're not as good. But I like the indices going into this rate cut situation because I don't think that the economy is falling apart. And that's an important distinction, right? If you're a bear on the stock market, you probably want rate cuts plus stock market falling because the economy is doing poorly. But I don't really see that as kind of the base case right now. I actually think that the most appropriate way to approach this in my strategy, in my approach, is looking for retests, looking for pullbacks. NASDAQ's down 0.5%. We're sitting at resistance here. And I think that, am I willing to take trades ahead of the meeting? Yes. If I can get the right setup, if I can get the right move here, then yes. I think we get 25 basis point cuts. If I'm wrong about that, it's not the end of the world. Doesn't mean I'm bearish. But if we get some 50 basis point cuts this week, it's going to be an interesting one. I just think that 25, let's just take a quick look. Like why do I think, what's guiding my thought on that? Why 25? Well, remember what does the Fed want to avoid? The Fed wants to avoid inflation becoming a problem again. So let me show you something. The Fed has had a nice win streak here with inflation starting to come down, okay? The Fed does not want inflation to spike back up. Now, if you cut by 50 basis points, and then you cut by another 50 basis points, you cut by another 50, if you start doing that, if the Fed starts cutting rates too quickly before and causes the economy to just go right back into hyperspeed, the issue is that's going to bring back inflation real quick. And the Fed has seen this story play out before, and it's ugly. Inflation coming back for a second round is usually more vicious than the first one, right? Look at, in American history, we've had a couple instances where the Fed has cut interest rates too soon, arguably. I mean, hindsight is 2020, but hindsight-wise, hindsight aside, they've cut rates too soon in the past and seen a reacceleration of inflation. They don't want to repeat that mistake again. So I think 25 basis points is a prudent thing to say. Not to mention, guys, we're at 2.5% inflation. We're not at their target of 2, right? You know what a comparable, I'm not sure why this is not working today, but if we were to pull up the UK's inflation rate, it's like right near 2, and they're still hesitant to cut because they know, right, that if they cut too soon, inflation can come right back. So at 2.5%, we're still off our target of 2. Yes, we're going in the right direction, and the Fed is trying to look, be proactive here. But we do need to be cautious that, if you're thinking 50 basis point cuts, then first of all, you're a super dollar bear. And I'm more bearish than I am bullish on the dollar. But recently I've very much become kind of neutral because, again, I don't think we're going to get 50 basis point cuts. But again, I'm putting it all out there. There's a lot of YouTubers in the trading space, investing space, who won't tell you what they actually think is going to happen. This is what I think, and I could be so wrong. On Wednesday, my comment section could be so full of people saying, "Nick, you idiot, they did 50." And I would say, you know what? It's not the first time I've been wrong, and it won't be the last. So I put my opinions out here on the internet, whether I'm right or wrong. I just want to ask a big favor of you as you're watching. If you appreciate that, if you want to support our cause here of just trying to stay real in the trading space, do me a big favor and hit the thumbs up button, subscribe if you're new. And yeah. Okay, so let me continue on with this campaign here. Why am I still thinking 25 basis points is a reasonable thing to expect? Well, GDP growth. GDP growth has been better than expected recently. It's been pretty strong, actually. Remember, the Fed doesn't want to reaccelerate inflation, and a strong economy, which we don't have like necessarily an incredibly strong economy, but you got to give it some credit here. We've beat expectations on the GDP front for some time now. Now on the jobs data points, yeah, you can start pointing out some weakness here. You had some weak jobs prints, but unemployment rate went down in the previous report. We didn't see 4.4 or 4.5, right? We didn't see a big jump up in unemployment rate, which would have suggested that the labor market is really, really sliding. So you kind of had this mixed jobs data last time around. You have inflation cooling, yes, but still off of its target. So I'm just kind of on the side of caution this week because I think that there's a lot of hype around rate cuts that's causing the stock market to get very, very bullish right up into the event. And my cautionary tale there is that if you're somebody who's like, oh yeah, bring on the 50 basis point cuts, it's one of those things we just have to be careful what we wish for. Because if you want 50 basis point cuts and that signals, oh, the economy is falling apart, or just as bad, oh, that signals acceleration in inflation. If we start pricing in, huge expectations for more rate cuts quickly, that could be very now at the end of all of this, you might say, but Nick, you're literally long gold. Doesn't this help you if they cut by 50 basis points? Absolutely, it does. Absolutely, it does. If they cut the interest rate this week by 50 basis points, gold likely flies higher. And I'm long gold, so I can't complain if that happens because I, again, would make money. But this is not my only position. This is not the only thing I'm watching. Primarily, I trade indices and gold. And right now, I've got a great trade going on gold. I would like it to keep going. But what I'm going to actually be doing in terms of action is leading up to the event, I'm going to be looking for chances to potentially trail a stop to lock more in on this trade. Because if I'm right, this is almost like a hedge for me, if I think about it. If I'm right about 25 basis points, gold probably pulls back, right? That's probably what happens. Remember, gold rallies on bigger and higher rate cuts than expected. So if you're somebody who's a gold bull, you probably do want 50 basis point cuts this week. You want bigger, you want weakness in the dollar, and that's going to bring on some potential weakness in the dollar. If you're like me and you think 25 basis points is coming, this is my hedge, right? I'm long gold. I bought this, a couple weeks back. This is my hedge. So meaning if 50 basis points come out, great. You know what? I was wrong, but I made money anyways. I'll take that situation. I've locked in gains on this position. I'm looking to lock in more gains. So I'm looking to a trail behind a higher stop loss if I can find it. Now, if it's 25 basis points, again, that's where I think you probably see the Russell pull back. That's probably where I think you see the Dow Jones pull back a little bit. And then I'm going to be a buyer of those things. So I'm really positioned this week for whatever wants to happen. I do have a lot of cash on the sidelines going into this event. The NASDAQ is another one I'm watching. I'd say if it breaks through these highs, it's just straight up bullish in terms of price action. But we are kind of sitting at a resistance point here. And I'm curious to see if we do, get a bit of rejection. If you get a 25 basis point cut, is there the potential that the NASDAQ sells off? Yes, there is, right? This week has so much potential energy in it. So anyways, one thing I'll say for sure, one thing is absolutely for sure, is that going into this week, you probably need a copy of the Edgefinder. And I know, yes, sales pitch, whatever. Oh, here we go. But I'm telling you what, if you are somebody who doesn't have data and you're trading just based on pure charts alone right now, I think you're missing a lot of the story that we can dissect here with our tools. So I just want to drop a link here in the chat. If you'd like to speak to a member of our team about getting access to the Edgefinder, we've got some discounts going on right now. You can also ask them about a paid trial. We do offer 30-day trials for $199, and that payment does go towards your final purchase after your trial. So if that's something you're interested in, we'll drop a link here in the chat to send a direct message to a member of our staff who's standing by to help you out with that. We're a software company out of Atlanta, Georgia. We build all these tools, spend day in, day out building these kinds of things. And again, we're not doing it for fun. This stuff is valuable stuff to traders who are trying to incorporate fundamental analysis into their trading, but lack the tools to do so. That is why we're in business. That's what we do at A1 Trading. So if you'd like to get access to the Edgefinder, the link is in the chat right now. Can also be found in the description down below if you're watching this live stream back as a recording later on. So anyways, top setups page, here's where I'm at. Going into this week, I'm going to just, because I'm traveling, right? I'm traveling to actually Greece for my sister's wedding, which is going to be a lot of fun. I'm going to keep an eye on this, but I won't be as active. I'll tell you what, I've got my levels marked up. I've got ideas for this week. Every trade that I take will, of course, be shared to our members in the Discord channel. I will still be active. Doesn't matter if I'm on the moon, I'm still going to be working and active. I love this stuff. So when it comes to this week, for me, I'm a buyer of dips. I'm trailing stops on gold. I'm probably going to look to sell some options if I can. And I'm going to watch some of the stock names that I really like, individual stocks that I want to buy on dips. I'll be looking for that. Congratulations to your sister. Yeah, it's actually, you guys may or may not know, Julie, depends on how much of an A1 trading fan you are. Julie heads our marketing. She puts out all of our emails. She builds our website. She does a lot of stuff for us. So it's going to be exciting to celebrate her and Luke, which will be amazing. So I'm getting a new brother this week, which is awesome. So yeah. Okay, so let's see. So we got Russell bullish setups, Dow bullish setups. Those are two signals that I'm looking at very close. I like the Russell a lot. I like the Dow Jones a lot. If we can get pullbacks on either one of those this week, I'm interested. I'm also going to look to potentially, depending on what happens, I may look to get back into my semiconductors trade on SMH. Down 2% today. I bought this thing heavy back in the August 5th drop, and it was one of my best trades this year. It doesn't look like it, but it was. What happened is I bought this thing like on this day, on the big drop day. I wanted to buy some semiconductors already, but with that big plummet through the lows, that was my chance. I finally got long right around here, and I trailed a stop in, got stopped out right around here, somewhere in this area. So market tanked back down, and I've been looking to get back in, and I liked the fact that we bounced off support again. So I am watching the semiconductor ETF SMH. This is one position that I would like to get back in. What I'm looking for on the semiconductor ETF, which is, I know, not something that everybody here trades, and I know a lot of people trade their indices, they trade their gold, but hear me out. These are the NVIDIAs of the world, the chip makers, the AMDs, Qualcomm's, Broadcom, all the, high-tech company stuff. These are companies that I want to hold. I want to own, but I actively trade them. So I'm actually looking for semiconductors to break out. If that happens this week, perhaps a 50 basis point cut could get you there. If you get any pullbacks, I am a buyer of dips on this one for sure. Now, as always with these videos, none of this is financial advice. This week likely will really hurt some people because people are going to go out and they're going to over leverage. They're going to make dumb decisions in the markets. Please understand, when I'm talking about taking trades, I'm somebody who actually does not have a ginormous risk tolerance. I have a good bit of capital, and so I'm not looking to, I heard Mark Cuban, and I am like 1 bajillionth of Mark Cuban's kind of wealth, right? That dude's insanely rich. But he was doing a interview where they asked him, what made you kind of get, he actually shorted the, he bought puts on the 2001 stock market crash, and everybody gives him so much fame for that. And he actually humbly said, he's like, actually, I didn't know the market was going to crash for sure. I thought companies were overvalued, but I also, more so than betting against it, I wanted to protect my own account. So he bought a bunch of puts on his own positions, and it ended up making him so much money and also saving him so much money. So for me, I have a good size trading capital. I'm not interested in doubling it quickly. I'm interested in protecting it and slowly growing it. And I think that that's honestly the mindset that every trader should have. But unfortunately, a lot of people who don't have a lot of capital don't think that way, and it causes them to blow accounts. So this week, I urge you to be careful. I urge you to think before you place trades. And if you feel overwhelmed by it, this is the kind of week where maybe just demo trading is okay. Because again, I'm telling you what, I'm going to get comments. I'm going to get messages and emails, as I always do. Oh my gosh, Nick, I blew my account. I've lost everything in this stuff because they traded silly, right? Please don't be one of them. I'm asking you, don't do that to yourself. Trade like an adult, trade reasonably, trade safely, trade small. Again, you do what you want. None of this is financial advice. But that's what I'll be doing. That's what I have been doing. And I would have never become a profitable trader doing anything other than that. Trade tiny. That's honestly a secret weapon in trading. Nobody wants to hear it though, because it doesn't make you money quick. Nobody wants to hear trade tiny because they're like, oh, so basically I don't make very much money. And the answer is, yeah, that's right. But is that better than losing your money? Sure is. I'd rather make small amounts and build them over time, compound them, turn it into a bigger pile over time, deposit to it. I love that approach. The approach I hate is people who just want to just try and flip their money quickly, and they get mad at you when they tell you that that's gambling, right? That is not an intelligent way to approach the markets, because nobody knows for sure. Here I am. I've done this for years and years and years, and I can't tell you for certain if we're going to get a 25 basis point cut or a 50. I lean 25, which gives me, a framework for this week, but it's a framework that can easily be broken if I'm dead wrong. So yeah, this week is going to be very volatile, so please be very careful. Trade like your mom is watching. That's what I would say. Dollar index is back towards the lows, right around 100.7 here. And, I'm like kind of going out on a limb here again, but I actually think that the dollar index might be closer to a bottom than a top. And I've been bearish for weeks and weeks and weeks on the dollar. I've been bearish actually months, right? However, other central banks are cutting rates too, which makes other currencies weaker. At the same time, I don't think that the Fed is going to cut by 50 basis points. If I'm wrong, I'm wrong. The dollar index takes out the lows and we go lower. I'm not convicted enough to buy the dollar. I'm not, but I think that when it comes to positioning, TLT, I think we've had a good run here. I am not trying to counter trend this trade. I'm not trying to short bonds. I'm not trying to go long the dollar. I'm not trying to short gold. But we do have to kind of accept the idea that, okay, well, if we don't get 50 basis points cut from the federal funds rate or guidance that really tells us that we're going to get a lot more cuts pretty soon, if we don't get that, then the market is probably going to correct some of these moves recently. But again, anything can happen this week. We could totally still see a big fat jumbo rate cut, 50 basis points, guidance for much more rate cuts. And then next week, I'll sound very different because I'll say, you know what? I was dead wrong. So again, I'm throwing out these ideas. Here's what I'm actually in. I'm actually long gold, which does benefit from 50 basis point cuts. So I'm sort of hedged in that regard. I like gold to the upside. I like the idea of pullbacks. But again, this thing could pull back like in like an hour, right? On Fed day. So I am bullish on gold. I'd like to trail a stop again before the Fed meeting, but I'm looking on the 4-hour chart for that. If we take out the highs, I may get aggressive and just trail my stop in, because again, I don't really want to give back a ton of profits here. If I am actually right and we do get 25 basis point cuts, gold's probably going to come down in that scenario. So yeah. So if you're somebody who thinks 25 basis points is more likely, then you would also probably think gold is a little bit stretched here. So I don't know that 25 basis points is going to happen, but I have a good guess. So it's probably the right call for me to look to trail stops. So I will probably do that. It's a little tough because we're not putting in sort of a strict higher low, but if I go down to lower time frames, I can find one here. Like this dollar index, if we take out the high, if we, this 1-hour chart, if we take out the highs here, I may look to just go ahead and trim my stop all the way up there in anticipation for volatility. Speaking of volatility, VIX is up about 5% here this morning. So we'll see where that goes. NASDAQ still down about 0.5% this morning. S&P's flat. Dow Jones is up 0.5%. The divergence here is very telling. You've got the Dow Jones, the more defensive names, up here today, and you've got the higher risk, higher reward stocks like NASDAQ stocks, tech stocks, etc., down on the day. So tells you a little bit of how the market is feeling, a little bit jittery. I do still have this short position, hasn't gone anywhere on the Japanese stock market, the Nikkei. So nothing to really update on that one. If we take out the lows, I'll definitely be trimming a stop further or trailing a stop. Oil's up 1.2 something percent. Oil's been in a big downtrend recently. Potential pullback to this 72, 73 level could happen. But again, it's just too soon. This week is so contingent upon what happens with the Fed. We do have retail sales tomorrow, which I think is your last kind of key data point ahead of time. Take a quick look at the COT report. Always good to check in on what big money is up to going into a week like this. Let me just refresh the page. So COT data, some interesting. So this is the week-to-week buys and sells. We got platinum getting bought by institutional money, the yen, the dollar, the Dow Jones, the Russell, South African Rand, silver, copper. Those are your buys. A little bit of selling on SPX, Bitcoin, NASDAQ, CHF, 10-year treasuries, gold, euro, pound, Aussie, Kiwi, CAD, Nikkei, oil. So there's your sells and buys here for the week, according to institutional money. Remember, if you guys want access to the report that I'm pulling up, if you want to use it on your own time, anytime you'd like, you can purchase it off our website, a1trading.com, or you can chat directly with a member of our staff here by using the link being dropped in the chat right now. So there you go. I think we were supposed to have a guest show up today, but is it Ivan that was, is he showing up late to the stream today? Or am I just wrong? No, Ivan was supposed to be here 9:45, huh? All good. I'll miss him. Okay, so let's take a look at some more ideas here. Let's take a look at silver. Silver's another one that is up off the prospect of 50 basis point cut. I've had a bit of a breakout here on silver. Depending on how you draw this trend line. This is the tricky part about trend lines, right? You can draw them 50 different ways and get 50 different results. However, the general idea here is that we've got lower highs coming into silver, and then we got the breakout, right? Big break of that downward trajectory. I think if you get pullbacks, this could be interesting for longs. You guys know I love my silver, love my gold. I'm already in gold. Again, I mentioned it, just looking at trail of stop. Gold is on an absolute win streak recently. We're at 25.88. I was right in the direction of gold this year, like dead right, but magnitude, dead wrong. I was bullish on gold all year long. If you go back and watch my start of the year video, I discussed how I was super bullish on gold because I very much thought the Fed was going to cut rates. It's going to lead to metals going higher because the dollar's going to weaken. I've been right on all that. Where I was wrong was, guys, I thought gold would end the year around 2280. That was my for fun guess of a number. 2280 is all the way down here. So now again, I called that idea, right here. So I was expecting for the year somewhere around a 13 to 15% gain for the year on gold. Do you know where we're at? We're at like 25+% this year. Gold has been an absolute beast this year. And at no point has there been really a great sell side window. Unless you were short from here to here or here to here, here to here. Those were like your points to make money as a bear. For bulls, you had all this, all this, all this, all this. Bulls have been killing it this year. I've been very right about the direction, but again, magnitude, I did not think we would go this high. That being said, I didn't cap my upside. So I didn't sell calls or anything on GLD, or I didn't cap my upside. But At this point, gold's price action is screaming higher, strong prices, movement up from here. So again, I don't have any interest in shorting it. I'm just trailing a stop loss on a trade that I currently have open. Hello, Nick. Where can I message you? I don't usually DM anybody. If you'd like to send a direct message or have a conversation about something that we offer here, you can send a direct message to our support team. The link is in the chat here. We'll drop it one more time. If you have any questions about products, services, whatever, you can send it there. But I don't really DM anybody because I'm just so important that I don't DM anybody. No, I'm just kidding. But I do just get so many DMs, and my policy has just been, okay, I can't possibly answer everybody. So I just have a support team, a wonderful team that is fully capable of answering any questions that you have. They can link you to videos. They can answer your educational questions. They can answer questions about our products and services. So I have a wonderful team that is fully capable of answering any questions you've got for them. That's one thing I'll say has been a very weird thing about growing a social media presence is like people like follow me, and I very much appreciate that. But everybody who sends me a DM, I feel very bad because I can't possibly answer all those emails and DMs. Like I would be sitting here, my full-time job would just be DMing back and forth with people if I did that. So I have kind of chosen the policy of I'd rather just address everybody on my live streams, videos, etc. And if you have a specific question, you can speak to my staff who can help you out. Okay, guys, I'm going to leave the stream here to Ivan for a few minutes. We'll let him take over. I've got to start heading out. I've got some packing, some finishing touches to the packing that I'm doing for my Greece trip. I will still be around. We got tons of content planned, and we got other people who are going to be taking over the show all throughout the week. You got Chandler and James conducting the show while I'm gone. They conduct it all the time, but really coordinating something for my absence. I will still be probably putting out videos. I may be even doing some analysis on the Fed stuff. So stick around. Ivan's going to take over the show here next in just a moment, and stay tuned. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
I just want to start with hello. Hope you have a fantastic day. What about interest rate expectations? Because we all know that it's FOMC by the end of the week. But who is going to cut rates this year? And I think that's very important because somebody asked earlier, how does rate cuts mean for the dollar? And I think that it is very important to, go by the first question I always ask you as the yen man and as the mentor here is, what does price do? So rate cuts by the end of the year, 118 basis points is pricing currently, with a 59 basis point of a double or 50 basis point rate cut on Wednesday. Then we have ECB. They have 72% chance of no change in the next meeting. Bank of England, no change. Bank of Canada, 76% of cutting in their next meeting. I think that's supposed to be in October, I think it is. RBA, no change. And Reserve Bank of New Zealand, 75% they are going to cut in the next meeting. Again, I think it's September, October. Not too sure. And Swiss National Bank may also cut in their next meeting, and slightly, but now we have turned from slightly chance of rate hike to most likely we're going to have no change by the Bank of Japan. Those are published about six hours ago, I think it was. So there is that. Very much welcome. I'm Ivan. I've been trading for 10 years. I suck at this. So what do I do? What I do is because I try to help people see the light, see what they're doing wrong, and try to improve you guys. That's kind of why I'm here, right? So for the longevity of everything, we're going to talk about a long thing. And there was someone would say, yeah, buy $1. Why don't sell it? Okay, I'm not here for that. I'm here for education. I'm here for, giving you the right direction. Then it's up to you, whatever you want to, if you want to put this information into practice or actually leave it alone. It doesn't really care to me, because the facts are that the S&P 500 for 2024 has been about, I think this year today is about 20% now. If you in your trading can do better than 20%, if you do worse than 20%, I'm not going to tell you, but a good deal would probably be having something in S&P 500 or stocks or something. Now, is that a good idea? Well, it is so-called passive by some experts. It's so-called you just buy and hold. That is one strategy. Or you try to catch bottoms. That's a bit more difficult, because last week I did poorly yet again as a trader, and I sold somewhere. What did I sell? I sold somewhere here, and I thought this is going to go lower. And then I'm like, okay, so, but I've always told you guys, for those who have been following me for years, I've also said always, stock market is going to go up forever. Forever. Up. But then there have years in this data that has like, well, if you ask COVID years, you say, okay, it's actually going to be a drop sometime, somewhere of about 36%. All right, cool. I'll take it. But then since COVID, if you bought the peak, you are about 65% up. What does that mean? What does it mean? It means that every single thing that you're trading, every single thing is set up to make businesses, to make money. Meaning, what is money? Money is money you have in your account, money you have receiving from your employer, money that is coming from the central bank to the banks. Everything is made to set up that this money will grow. Okay? How does businesses grow? You have taxes, you have policies, you have the human's desire to do things better than it was yesterday. And efficientizing, and for example, AI. If we didn't have the ability and the need to do something better, we would never have AI. So we'll probably never have chips, or probably never have computers. We'll probably never talk to each other. Okay? If that is always going to go higher, if NVIDIA is always, what is it called? What is NVIDIA? NVIDIA. Okay, cool. NVIDIA. If NVIDIA, which is a lot of the gains recently, if that company went bankrupt today, that's going to be that way. We don't want that. We don't like that. So when it comes to Forex, when it comes to commodities, comes to business, comes to stock market, comes to anything and every single financial transaction you ever do, it is in the belief that it's going to give you value. Therefore, we're also looking into what is maybe not. Yeah, sorry, that was not supposed to be happening, but cool. What is the stock market doing today? NVIDIA is a bit down. Apple is a bit down. Amazon is a bit down. Microsoft is a bit up. Oracle is a bit up. Meta is a bit down. But by the end of the year, they're probably going to be pretty much. Apple is up 15%, but year to date. NVIDIA is up 134. Microsoft is 15. Amazon is 22. Meta is almost 50. JP Morgan is 22. Google is 13. What does this matter? It matters because whenever you trade, whenever you're trying to find your setup, whenever you're trying to always look for that next opportunity, breathe. There is a day tomorrow. Okay. Today we have Empire State Manufacturing Index coming at 11.5. It's a bit better than expected. If you look at the data, give or take, is within the range. It's not horrible, not better, but it's actually okay, it's actually quite good. Not too bad. Not as worse as it was back in February, February. But okay, cool. It is good as November last year. So we are improving again. Good. What does this mean? Manufacturing PMI is, yeah, it's all right. It's a gauge of business conditions in New York for New York manufacturers, and manufacturers on the entire economy is rather a bit of a smaller, but still it gives you a bit of direction of where the market is currently, or the current business is currently doing. Because by the end of the day, that's what we're actually trading. Why do people call me yen man? Because I have found love in the yen pairs. And you might ask yourself, Ivan, why on earth do you do that? Well, it is a couple of good reasons. It is, in my world, very directional whenever it does a direction. It's not too bad. It follows what I call seasonality. It goes up in certain directions and down in certain times. And I'm like, cool, I'll do that. So I found a love because when it goes risk on, it really goes risk on. Okay, so and then it's a funding currency. It has the lowest interest rate on the planet at the moment, almost, and it's very weak. It's always going to be weak. The Bank of Japan is spending a lot of money to make it weaker, to try to create some creating some economic growth for those businesses in Japan, which has been trying for 30 years. It has been failing miserably, and they might now be able to succeed. I can't speak today. I do apologize. Let's start again. I'm trading yen most of the day because it's familiar to me, because that's my new wife. Sorry, wife. And it has a fundamental / monetary policy direction for the past 30 years that pumped money into their economy, and they haven't really gotten anything out of it. Which is, you're not able to. See the matter. No. So, that's that. So why wouldn't I? Ivan, can you touch on retail sales importance before Wednesday, please? Retail sales isn't your most important thing in the world. Why is it so? Because what is retail sales? Let's do that. That's kind of why I'm, here, right? Retail sales is basically what you buy at the grocery store without counting for inflation. So, let's say you buy an item. Let's call you buy some jeans. You want some nice jeans, and then next week you buy jeans again, but then it has gone up 10%. Woohoo! 10% in one week. Then retail sales will say the goods and services within retail sales are 10% up. But the inflation may have been up 20%. So actually, the jeans from one week to another decreased in value generally in the economy. But if you just take the retail sales only, they have gone up 10%. So it's a bit misguided situation. It's a bit misguided thing. It's still a part of CPI, so it's already inside CPI. So it's kind of like it's a gauge of where CPI might be, but it doesn't tell the whole story. But you still want to look at it because it gives you an indication for CPI. So you're like, well, somewhere between there. I'm wondering if bad retail sales maybe can push 50 base cuts. That's going to be a horrible. That's going to be a horrible retail sales for that to ever be close. You would have to kind of go back to, again, Bashi, breathe. Okay, cool. So what do I mean? Is CPI, PPI, and PCE is already out. We already know them. We already have the trend. We already have those numbers. Those are the most important inflation numbers. Okay? Going forward, it isn't as important for you to think of retail sales because it's already inside CPI. And PCE has become, year over year, has become like the new thing to look at. Okay? Cool? Good? Great. So, setups. For me, I am mildly looking for sells on yen pairs. Mildly, because I believe this should turn around soon. I've already set up my bottom line where it should go to, which I said back in September or August, actually. I set it over here, like what, 8th of August. This is where we should go back to. Great. Now I need to see the reversal and to see a bullish trend. But then I've also said I don't think this is going to happen until 23rd of August, 23rd of September. So that's a 1 week from now. What's going to happen this week? I don't know. You tell me. So a bit indifferent. And then wondering why. Why do I even do this? Because the most important thing that I do here is I'm not giving you financial advice. Think for yourself. That's why I'm here. Because you are your greatest expert. Yourself can only do what you can do best is analyze information you are provided with through the edgefinder, through the internet, through your friends, and whatever. When you put yourself into a position of when am I going to invest? When am I going to do this? I have come to a conclusion, which also Nick has come to, by the way. Somehow we are more waiting. Why do we wait so much? Because if I try to trade here, I'll make money. But I also know that it's a time of I will not make money. And then I will make money again. And then I have not made money in those. Okay, I haven't sold this fall. But I would have made a lot of money doing that. But what was my theory? What was my plan? My plan was to buy here and buy there. So I did so. And my plan was not to sell here, which I should have, I could have, I would have. All of those. But that's 2023. So I am right now just waiting for bullishness. I can say I can sell this week, but it's a bit pushing it. On the other side, am I going to be true to what I've always done, what I know it works, or am I going to be true to pushing YouTube ideas? I don't know about that. So, I can say, oh, it's going to be boring. It's going to be, waiting for setups. Yes, sir. That's what we do, right? So someone said, buy dollar. And I've already said to you, probably a million times already, but I'm going to say it again. What is the current monetary policy direction? Somebody said rate cuts. Even speaking rate cuts, dollar fell. And dollar has been falling dollar fell in December 23 because of rate cuts. It was then through CPI and everything else was priced out because, wait, we are not going to have rate cuts. We might be rate hikes. I said it back in April. I'm like, what if we have rate hikes by the end of the year? I made fun of that. I made it funny. I think it was 8th of April for those who wants to look at that. But I made fun of it because we had completely turned the monetary policy outlook, okay? That's always going to be your guidance. It doesn't matter if you're going to be 50 basis points, 100 basis points. What is it going to be next? And we are 2 to 3 months into the future. And you're wondering to yourself, how is that even possible? Because we've already fallen from 106 to 100 on dollar index just by expectations. We haven't cut a single basis point yet. Yet we are down 5%. Boing. Make that make sense. Basha asks, do I have negative months? Oh, I have negative months, and I can tell you for free, those are horribly good. No, as I try to look for 8%. I need to reduce my risk, by the way, if you're wondering, but I've tried to gain 8. I should risk 5, but that hasn't happened lately. But yeah, it's, and also the count that you have online that you have access to. I think I started at 100. It's now 150, I think. So, but that has also been down some days. So, if I'm just trying to grow that one more than anything else, and I have to have higher risk. I have a too high risk on that. But my other account, on my general account, I should have 8 a month. Doesn't always hit it. You can have -5s, -10s on those attempts, but overall should in the end be give or take positive at the end of the year, number one. And if you're better than the S&P 500, great. And if you're not better than S&P 500, really do yourself a service and negotiate. Review your strategy, review what you're doing. And I'm not going to say put all your money in S&P 500 in the meantime, but I mean, until because you have to have a very long time horizon on S&P 500 for you to be investing in the stock market. Not my investment advice whatsoever, but you should have it there for like 5 to 10 years for it to actually be profitable over time. Over 10 years, you are 100% profitable because you can have bad years. And I don't know if we're going to fall now, right? We are at all-time highs, but basically speaking, review what you're doing. I'll help with that. I review strategies every day, but you are don't have unrealistic expectations. Go with what you have and see if you can improve that. Change strategy if you need to. That's radical, by the way, but always look to improve. Don't change it a lot. Change small things every time so that you know that you have most things constant so that you can actually review. Because if you take 20 trades, 10 of them are break-even trades. Are you a good trader? Euro down the rate cuts by 0.5 after euro pairs made a bullish move. What's the reason? Lamrin, which is very interesting. I hope that you followed that last week. But rate cut in euro in the current situation is bullish. In a 20% trade, in 20 trades, also 10 of them at break even. Then 5 is negative and 5 is positive. Are you a profitable trader then? Are you a profitable trader if 10 is break even, 5 is negative, 5 is stop loss, and 5 is take profit? Your link to follow you. I want to start trading UJ. Sure, if you want to trade UJ, that's totally up to you. But look what drives it at the moment. Look for what drives it. What does it at the moment is interest rate differentials. And right now, UJ, it is a lot. You need a lot of money to trade UJ. UJ is not normal at the moment. It is, I don't know if it's a winner maker or what, but it's 600 pips up to the previous high. Depends on your RR, positive ones. Yeah, it does. But you should be positive. It should be a profit. Hi, Chandler.
Hello. Hey, Ivan. I haven't spoken to you in face-to-face in a while now, so I'm going to have to come in and cut you off. I'm sorry. But we have our next guest coming on, and, we're working on the schedule for this week since Nick is off to Greece. So we might see you again this week. I wouldn't be shocked.
To Greece.
He's going to Greece. His sister's getting married, and she's getting married in Greece. So
she just jumped on a flight.
He's going to go fight a cyclops or something. So.
Find a white beach somewhere.
Well, Ivan, it was good having you. I'm sure we'll see you again before the week is over, and we'll let you know ahead of time. So we'll see you next time, and have a good day. And guys, go sub to Ivan. I put his link in the chat. There it is right there. And yeah, he's in our Discord. He's our A1 Trading Mentor Coach. He does exclusive webinars in there. So if you're interested in learning more from Ivan, check that out. He's in our VIP Discord. So Ivan, it was good having you.
Thank you very much for having me.
All right. All right, guys. Now we're gonna take it's fall. We're gonna take the show over to Chris Pulver. He's also in our VIP Discord, and we're going to play a quick break and introduce him. He's going to take us to the home stretch. We got no one else after Chris. So, Chris, it's all you after this.
Hey, everybody. Thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. Let me go ahead and grab the screen here. I'm just getting a trade posted in the alert section. Let me finish that up. Let's see, profit on the bearish side. Playing volatility through this week's Fed and end of month October kickoff. All right. So I am going to play a little bit of both sides here on the SPY. It would look something, I'm trying to think what the best way is to illustrate this. On the upside, I'm looking at a move to 577. Let's see if we have the long side here. So 577. And then I'll do a flip side short position and down to 540 like that. There we go. So move this over and I'm playing both sides. So basically I'm looking to see, put an arrow here. Arrow. Does price go up? Does price go down? And I'm going to play both sides of it. I suppose I can move this over here. So the dead zone for me is right in the middle. I'm giving myself more bearish potential than I am bullish potential, but either one should be able to offer some profit. If we see at least a $10 move one way or the other, I should be able to get some profit. So $10 up, $10 down, that covers the cost of my debit. I'm looking at a max profit of around $13 to the upside and $21 to the downside. Realistically, I'll probably end up managing a profit percentage, like a 25 to 50% take profit would be pretty solid. So I will copy this link, throw this in the chat there, and on we go. All right. So that's the SPY. I'm going to look at pricing out one on the Qs as well. So this week, I mean, we're coming into obviously a really important week. It's finally here. You know, all this talk of will the Fed cut, won't they cut, what's going to happen, how many basis points, how many cuts, blah, 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 blah. It's all here. Now, not all calendars are showing the same thing. Not all forecasts are showing the same thing. I do think this is really interesting that last week on, I want to say Wednesday, Thursday, it was up here at like 87%. 87% that the Fed's like just going to give us the old 25 basis points cut. That has quickly shifted. Now, I don't think this is a foregone conclusion. I don't think this is set in stone. I don't think this is a guarantee. I think the one thing I can expect to bet on this week is that the market is waiting with high anticipation of what the Fed's going to do. And ultimately, to make my decision, it's going to be about where price settles on the day and price settles on the week, right? Because look, I get it. Like we're sitting here, you're near the all-time highs in the S&P. We are not near the all-time highs in the NASDAQ. We are at the all-time highs on the Dow, and we are not near the all-time highs in the Russell. So let's talk about that for a second. So S&P has the ability to revisit all-time highs, right? QQQ has room to run to revisit all-time highs. The Dow, well, let's put NASDAQ here, I suppose, since you can trade whatever instrument you want, but NASDAQ has room to run to revisit all-time highs. The Dow is hitting all-time highs again. And you could argue, I mean, maybe not from a percentage standpoint, but you can argue that it's price action on the Dow is actually more supportive than what we've seen in the S&P and the NASDAQ by hitting all-time highs. So something's happening where, you know, the Dow is Loving this current environment. We've made, I think, 3 or 4 all-time highs where the other ones have struggled since we topped out in July. And then the Russell has room to run for recent highs. Also a ways to run for all-time highs. So if we are going to see, and last week we did notice this, we had that big turnaround on Wednesday, Thursday, Friday. Broad market was actually quite bullish. So kind of spreading this out from just semiconductors and just Mag 7 and just the best stocks and just the highly concentrated run we've seen through most of this year with this narrow, light volatility, the market has broadened out a little bit. To the sectors that are usually not leaders, like utilities being one of the best sectors of the year. If we go to sector performance, this is kind of wild and crazy, but go to the year-to-date performance, and you have your S&P up 17.95. You got communication services up 19.56. You got utilities up 24.02. You got financials 18.38. Staples 16.52. So the reason this is interesting to me is this barely ever leads the markets. Okay. This barely ever leads the markets. Financials barely ever lead the markets, and they are some of the outperforming sectors this year. So utilities especially. And I don't really know why utilities are ripping the way that they are outside of there is a need for better, more efficient energy. There is a need for electricity. I think this is a lot to do with like the AI infrastructure that's being built. I've been long XLU all year. I wish I was long as far as like bigger exposure, but it was just pretty much just a bunch of puts and a bunch of bull put spreads. But it's been a nice little income generator for me. If we look at XLU, it is ripping to the upside, and we are sitting here, at all-time highs in XLU since the highs we had back in 2022. Now, I look at this and I'm like, do I want to get excited about buying all-time highs in utilities? Probably not. I think there's other ways to play this right now. So I'm going to be patient for a couple of reasons. One, if the market's getting a little bit over its skis, I could see a pullback happening. The month of September rarely starts out. If we start out with a rough sell like we did early in September, we typically see the market still finish the month red. I saw this back to like 1950. If the S&P starts out with a red September, like the first week of September starting out red or having, whatever pullback it is, every single time it's finished red. Now, obviously the market can be different, and maybe we can go 1 for 11 instead of 0 for 10. But historically speaking, the market has been green on the month 0 times in 70 years. If we start out red, we tend to stay red. So that does tell me that it is quite possible that we could have a bit of a fake out trade to the upside because all of the price about the Fed rate decision is already priced in, right? It was kind of pricing in here. It was certainly getting priced in here. I suppose, even though this was, what we thought was, oh my gosh, the Japanese yen's deleveraging and the carry trade is unraveling. But that quickly turned around to what? I mean, I don't know why with employment news, right in the headlines, the market had shrugged off everything within about 20 days. So we had this August 5th bottom, and within this actually goes up to about 14 calendar days, we shrugged off that entire move. So, I mean, I still think that this market loves to buy the dip, and that's probably going to still be the factor. But I just want to ask everyone here, how many of you think that this market can easily go up to 600 before we get a pullback to this level? Because the only thing that's driving it right now is just the Fed, right? We had employment news, which was bad. We had inflation data, which was fine, but it was expected. I mean, everyone knows that inflation data is trending lower, right? Employment news, we still have more wait and see from the Fed, and we might hear this from Jerome Powell on Wednesday. But to get to 600, to stretch another 5, 6, 7, 8, 10% higher, I think there's going to have to be broad market participation. I think we're going to still have to see a good earnings season, and we're not there yet. Like, earnings season is still out another month. So for me, I don't think there's enough evidence to go and justify this move all the way to 600, when instead, I think the market is way more risky to the downside in the near term than it is the upside in the medium to long term. I think we still get higher, by the end of the year, as long as we don't have some crazy shift in policy expectations going into 2025. But just because we're sitting here near those all-time highs, I could see a fake out trade that has more volatility to the downside. I don't think we necessarily have to go all the way to where we thought, the world was going to freaking, end momentarily for a flashy Nikkei dump to 27% of the Nikkei and 10 to 15% of the S&P and the Nasdaq. But I could see the volatility having this effect where nothing really happens, right? Other than volatility. So that is what I'm playing. I'm playing volatility where I'm giving myself some upside in case this melt up continues. I'll take advantage of it, but I'm giving myself more downside in case the market's going to go way, way lower, way, way faster. So, Greg, I hear you popping around there. What's up, dude?
Hey, Chris, what's up?
Not a whole lot.
Can you hear me well?
Yep. Let's see if we can. There we go. Now we're both on the stream. You working from home today?
It's a little different having we're all home. Nick and Julie and other people are out of the office.
Okay.
For a wedding. So they're
Nice.
in Greece.
Not too shabby.
Or they're going to Greece. So we get to work from home.
There you go. So what are you thinking this week? I just put on a trade on the SPY. I was going to price one out on the Qs. Let me take a look at the Qs really quickly. I want to get a point measure here to the downside. If we go down to retest this recent low here, Frank, I like a move that is 22 points away. I'm going to go out to October 4th on the Qs. And I want to get myself enough volatility where we can get through this week's triple witching. We can get through the Fed. We can get through the end of the month, which is the 27th and 30th combo. That's a Friday, Monday. And we also get into the first week of trading with non-farm payroll on the 4th. So if I go out to the 4th, that Friday, we're trading at 471. If I buy the 472, buy the 470, I might even consider one strike higher and lower to lower the cost basis, get myself a little bit of a dead zone. That's a $4 dead zone. I don't love that. But anyway, let me see what I can price these out for. So if we're at 471 and change.
Is this a strangle?
Nope. This is going to be a reverse iron condor. So right here, I'll show you what. So here, and analysis. Can you see that?
Yeah.
Okay. So I have my dead zone. I have my risk. I'm going way more profit potential on the put side than I am on the call side. But still, I would make about I'm trying to think, maybe around $400 a contract on the call side, and potentially making I'm trying to think about $1,100 on the put side. So I know I'm balancing the trade a little bit differently, but I think that we are limited more to the upside than we are to the downside. If we have high volatility, I think that high volatility comes crashing down versus ripping higher. I think we could melt up higher, but I think we'd more crash to the downside if price action shows that there's just not enough momentum to like push us significantly higher. So that's what I'm doing on the SPY. I'll do something similar to that in the Qs if I like the price, but I'm trying not to pay an arm and a leg for the Qs. So I want to price that out right now with you. All right. So if I did a 472 by 470, maybe the 473, give myself like a $2 window to the upside. So if I went down here towards 449 on the puts, 449, that's way down there. I'll just say 450. So sell that put. That gives me $20 of downside potential. And on 473, that high is 485. This gap is 490. I think 490 looks good. 490 looks good. Let me see what I can get for a sell trade there at $1.85. So I could pay $11.50 and have 17. So let me do the math here. So I could pay $11.50 for the debit. On the upside, I'm giving myself $17 of potential profit. On the downside, I'd be giving myself about $20 of potential profit. So probability of profit.
How far out is this?
This would go out to October 4th.
Okay.
So I'm buying myself some time in the trade, because if I'm, trying to play it like, it's got to be this week. It's like, well, if it's not this week, and let's say it's a bunch of noise, but then after the Fed and after this week and after triple witching, then the market starts to move. I just think, we still have more data to come when it comes to employment news. We have the end of the month as well as end of quarter. So I could see that being another reason why the market has enough components to help it move. And I'm just going to try to grab something here October 4th. So if I could get, let's say $4 to $5 on the upside, and I could get maybe $8 to $9 to $10 on the downside, that's enough to hit a nice little 25% take profit, 50% take profit. So I'm going to take this trade, dude. I'm going to try to get 1150 on the Qs. That gives me 17 to the upside and gives me 20 to the downside. 1150. I might have to take 1155, but let's see if it'll fill me. So here, 1150, not filling. Let's go 1152.
490 on the Qs.
I filled at 1151.
So you got a 20-point move to the upside and downside?
The upside is $17. I'm doing a 473 by 490. And the downside, I'm doing a 470 by. Okay. Yep. I'll type it out in just a second. I'm going to get these trades in. Just give me like 60 seconds to get all these trades in. Okay.
Yeah, I'm looking at SPY.
Okay.
Just debating taking something there.
All right, I've got everyone's account in. Very nice.
So
make sure those all filled.
I don't know if you already talked about this or not, but this morning I looked at the Fed Watch tool again.
And now they're talking 50 basis points.
Yep.
Yeah. When did that? So I saw you post that. I saw you post that last week. What day did that shift the most? Where we went from like an 87% probability to be a 25 basis points, and then it went to like 50-50. What day was that last week? Was that Thursday?
I don't remember it being 80. I remember
it was like 87% early last week.
When I posted, I think that was either Thursday or Friday. I think today was the biggest change I've seen.
Well,
today, like 49 to 65%.
Yeah, it's nuts, man. And honestly, let me take a quick peek. So now it's 57 to 43. Let's take a moment here. Will you share the screen and bring up a couple of different? Do you have like different economic calendars in mind? I'll get my Q's trade posted here in just a second. I'm gonna do QQQ. I'm gonna get this posted.
Economic calendars.
Yeah. So like Forex Factory on Wednesday this week. Let's go to Wednesday. So Forex Factory still has the Fed with a 25 basis points cut. This is what's forecasted. So I want to go through like maybe 2 or 3 different calendars and see, are they all showing the same thing? Are they all showing different things? Are they all showing the Fed might only cut by 25 basis points? So this calendar shows Wednesday. This is only showing a 25 basis points cut on Forex Factory. If you go to, let's say, Daily FX is another one.
Yeah.
Daily FX. Where's my calendar? What? Analyze and learn. Economic calendar.
I don't know
what the
if this is for US traders.
I mean, economic calendar. Let's see what Bloomberg says. This is pulled in. Your keyboard is so loud. It's so loud, dude. It sounds like you're typing with wooden fingers.
Maybe I am.
Maybe you are. Maybe you've got Jenga pieces duct taped to your hands.
Yeah, these are very clicky sounding. So this has on Market Watch. Oh, it does not have a forecast.
Okay. I'm looking for Wednesday interest rate decision. Interest rate projection. Projection current. Okay, so this is interesting. So this is Bloomberg. They are showing the current interest rate projection at 5.1. And we're sitting, so right now, I mean, technically the window is 5.25 to 5.5. That's the current window. So if we get a cut to 5.1, is that going to be like a 5.1 to 5.35? Is that like a weird, that maybe that's a 25 basis points cut, or is this a 5.5 on the high end down to 5.1, which is roughly that 50 basis points cut? Here it is right here. This actually, see this interest rate decision? So they're forecasting 5.25. All right.
Yeah, so just a smaller cut than
small cut by Bloomberg. All right,
think.
so we got Forex Factory.
The Fed watch tool is constantly changing. So
I know nothing. This is definitely going to be a mess. It's going to be honestly. This might be so. This tool, by the way, had only been wrong since 2009. Like that was the last time this tool was wrong. So going into the rate decision, it's only been misled one time. That was 2009. Other than that, this thing has been 100% accurate, where going into that final day of FOMC, this tool is spot on. So it'd be a wild surprise to the Fed, if every calendar says 25 basis points and the Fed's like, we did 50. And again, maybe it doesn't mean anything as far as what direction. Like I don't know what direction we're going to go. Okay. But I do think that a surprise would be what the market doesn't want to see. And so a lot of volatility would be more likely if we have more of a surprise. And so I think that the game here is we just check this every day. If it's edging out one way or the other, okay, fine. If it gets to be 50-50, then we're coming into that Fed decision with a coin flip. And I don't know what it's going to do. So what I'm doing is I'm taking advantage of that and trading it, So anyway, this is one spot that I'm going to be watching to the downside on the. So that's one level I'm watching on the Qs, and then on the upside, looking to see if we can fill this gap. So that's my Q trade.
There is there could be a muted trade this week, regardless of what the number is. We could just end up kind of where we started, and then next week is when things start to pick up.
I agree.
Kind of how it's been recently.
Yep. I agree.
I'm thinking about taking maybe a vertical, like a bear call spread above the highs for Friday.
Okay.
57.05. That would be, if I price it in, that's $1.10, $1.20 right now. But that would be 4 days for $1.10. But that's also above highs. What do you think of that? Do you think that's too risky?
Let me take a look at it. I'm going $1,700 max profit on bull side and 2,100 max profit on bear side. Okay, I want to price it out with you. Just give me 1 second to post this. All right, so that alert's posted in the A1 Trading Chris's trade section. I put that one under index trade. So I did the SPY this morning and the QQQ. So I posted that in the under my section for Chris's trades under index trades. All right, what you're talking SPY, Frank?
Yeah, or
okay.
SPX.
SPX, okay. All right, and are you picking a direction?
Yeah, I mean, I don't want it to go above 57.05.
57.05. Okay, so 57.05. So 57.05 by 57.10 bear call.
Yes.
Okay. Let's take a look at it. I think Ivy should be somewhat high, but actually, let's take a look at this one. I think it's obviously going to be trading for less now than it would be if price gets higher to that level. So let's go to what expiration are you kicking around for SPX?
Friday.
This
the
Friday.
20th.
Okay, this Friday the 20th. Got it. So we'll do a PM expiration, not AM. 5705. 5705 by 5710. Now, right now, Frank, that's trading for $1.10. I like this trade if you put in a limit of like $2 or $2.25, just to see if price comes up and threatens that level and you get more credit. Now, you could also say if price were to, really test it and go through, let's just throw a number out here. 5,700. First off, we do have the ability, like ATR wise. The weekly average. Let me see. Let me get in. Yeah, I've got the daily. So the daily. Let's go weekly average. Add in. I'm going to add in another ATR here at the bottom. Average, true range. Is that the one that I wanted? Sure. And let's do a weekly. There. I just want the number. Okay.
What is
so,
that? 100 something?
153 points. Yep, 153 points. So to the upside, we obviously had like a kind of a neutral start to the week, but 150 points to the upside pushes us to maybe 5770. But there's no guarantee that we're like just going straight up for that full weekly trading range. Look, if you like the level, that's really what you're telling me is you like the level of 5705. I like this trade where if price were to blow through that spot, putting this in at like a $2.50 to $3 credit, that way you at least risk less than taking the trade right now. I don't love the trade at $1.10 because that price could certainly be threatened. Now, if I move this up to like a 57.50, right? So we said that the high side, if we did 150 points on an average week, that would put us up to around 57.70. A 57.50 trade, if I shift these down, if I sold the 57.50 by 57.55 and I got filled for $1.50 on this trade, I like that one for less credit, but that's also, towards the outer edge of that weekly trading range. But for your trade, I think as long as you take like $2.25 credit or $2 credit, $2.50 credit, I don't think that's too bad as far as like just a binary, I win or I lose. But take more credit up front so you're not putting on a big risk. That's what I like.
Gotcha.
Yeah.
Okay. Daily though, I don't know if this week is a good week to do something like that, like sell bear call spreads or bull put spreads. Unless you're doing it and you think it's going to work. I feel like this week's going to be kind of volatile, but what are your thoughts about doing like a 0 DTE on the bear put side or the bull put side?
Bull put side. I think today's fairly safe. Let me look at the SPX. Let's go out to just this expiration for today. We're already pretty quiet on the day. Bull put, maybe I would just keep it based on a high probability delta. I like the, let me look at the chart here. So right now, all the levels that I'm seeing, so this was, did that just happen? Did we just have a 15-minute candle that did that? Yep. Okay, so we did have a decent little slide. Would you rather put in a bull put spread or bear call spread, dude? I think going on the day like this
Probably
high
bear
would be
call spread.
Yeah, I kind of like the bear call
I
spread
like
better based
going
on that
above.
price.
Well, I wanted to go above all-time highs, but I mean, obviously, if you do that today, you're going to collect like 2 cents maybe.
Right.
So I was looking
see
at a
what-
week.
Let me see what 5640 looks like for today. So if I went up, this high is 35. If we went to 5640, I'm curious if there's any premium there. 5640, sell. And that's not too bad. On a 0 DTE, if I could get this 5640 by 45, maybe filled for $1, maybe $1. We're trading about a 15 delta. That's an 85% probability profit. Not too bad. Bear call spread, you'd have to settle for probably 75, 80 cents, which does put a lot of risk on the table, which I don't love. But if price goes up, which it's doing right now, I mean, price is kind of rebalancing that candle that just dropped on the 15-minute. If all we have is price going back and forth, which that's what I'm suspecting is going to be today, is like very quiet, very muted price action for today. So I do think a bear call spread like 56.50 is probably fine. I think it's a pretty safe
Okay.
trade, to be honest.
I probably won't take that today.
Yeah.
I don't know.
I'm
gonna look for the end of the week.
Yeah.
But we'll see.
We will definitely see. I'm contemplating this trade, but I got burned last week on that broken wing butterfly. Let me think about this.
I know.
So I'll go call butterfly spread, move these up. I'm gonna move this up. I can also do the NDX. Hang on 1 second. I don't know. I might try another broken wing today. But it's gonna be credit. If I trap it, that's luck. What do we say? 56.50. Let me move this down. So 56.50. If I pin that price to 50, 15 cents for a profit trap. I mean, it's just not that far away, dude. I mean, it's outside the expected move, which is fine. There's about an 88% chance of profit. Am I happy with 15 to 20 cents for credit? Not really. But the profit trap of making $500 today does seem kind of enticing. I just don't want to have price do something stupid like it last week and blow through my tops. Let me check the NDX really quickly. But I don't know if the NDX is going to be close enough. Yeah, it's 10 points wide, so it's going to be a lot closer. Let's check NDX. NDX. So NDX, this one I might end up taking, Frank. 19,560. I'm going to go up to 19,600. I'm going to do a call fly on this one, 19,600. I'm going to see if I can get any credit for this. 19,600. So if I did 19,600
for today.
For today, yep.
Okay.
So probability of profit is 96%, but I did the same thing last week and got freaking smoked on that trade. But if I get a profit trap, I do walk away with $1,000, and that's great. I think today is going to be somewhat quiet. I could still get 20 cents on the day. I don't love that, man. I'm risking $1,000 to make 20 cents, but I'm also putting a profit trap up there, which is a lot better to me than just a credit spread. So 19.6 would be.
You're doing a broken wing, right?
Yeah, a broken wing butterfly with all calls. Yep.
I see. I'm trying to price it out too. Mine's at like 8 cents.
8 cents. I'm showing a mid at 12 right now, 15 cents. Let me see if I can get. I'll put it in here. I'm gonna do the same thing last week. I'll put it in at 50 cents. So it may not fill. If price goes up a little bit to retest the intraday highs, maybe it works out. I'm gonna throw a 50-cent trade in here. I'll take the same the same risk I did last week. The spread's a little bit tighter, so I go 10 and 20 points wide. I'll throw this in. I'm gonna try this one. This might not fill though, so I'm gonna take my chances. That's gonna be a pending order. NDX. I'll throw that in. This is also an index trade. NDX 9/16 expiration. Sell 19,600. Call. And then I'm doing 19,590. Call. And the 19,620 call. Okay, so I'm looking for 50 cents credit pending. If this trade doesn't fill, it will auto cancel end of day. Looking for $50 income if filled with 96% probability of profit. Also looking for profit trap with broken wing butterfly setup. All right. So we will see if I go to if price goes up here. What's that?
What was the
I put a
the
limit
price?
credit at 50 cents. 50 cents.
Okay.
So 9,
NDX.
16 expiration. Sell 2 at 19,600. Buy 1 at 19,590. Buy 1 at 19,620. 50 cents credit pending. Okay, so in order to get that, price is going to have to come up kind of intraday. If we can maybe see price back to like 19,450, I may get filled on this position. And then 19.6 is we'd have to break Friday's high. So, I mean, obviously there's risk. I'm going to be super mad if I get freaking stopped out again, but I think today's going to be pretty darn quiet, man. I don't think there's a lot to justify the market going any direction today. So anyway, that's the trade. So let me post the link right there.
Yeah, I think it's going to be choppy.
I do too. I'm kind of happy that it's choppy because I took a nice little win this morning on SPX. That was 60 cents a contract. Did a nice little daily strangle, so that worked out okay. But all right, so NDX is pending. The Qs, I took that trade on the Qs for vol. I took the trade in the SPY this morning for vol. So that's really my plan for these next couple weeks with what we expect to see the Fed do or not do with 25, 50 basis points. I don't know. I mean, I look at it this way where there's going to be something that happens. I mean, either the market is higher or lower, but I don't think the market's going to be going nowhere. And maybe this week is just super choppy and it's a long wick one way or the other. But once we actually start to see price go somewhere, I think the easiest way to trade in the near term would be just wait. Just wait for the Fed to close on Wednesday and see if there's any, decisive candle. Wait for the day in the week to close by Friday and look to see if there's some follow through. But I would just anticipate a lot of noise this week. Once we get through the Fed, earnings season doesn't really kick off until October. So for the rest of this month, there's really not much else for the market to digest outside of Thursday weekly income or unemployment claims for the U.S. What else do we have on the calendar for the next couple of weeks? I don't think there's much. I know we have a lot of central bank rate decisions, but that's Forex stuff. This week, in fact, we have the Bank of England, along with the Fed, along with the Bank of Japan, and next week we have the Swiss National Bank. So we still have several other banks that are reporting this week. So FX trades, I'm still long against the Swiss. I'm going to hold those positions. The BOJ, no rate hike is expected, so that just might be a bunch of chop. But yeah, I mean, let's see what happened here. CBRates.com. There were some cuts recently. The Fed cut, or the ECB cut 60 basis points. Australia is still holding their 4.35. Canada cut September 4th, and they cut another 25 basis points. Eurozone cut big September 12th. The UK is, are they forecasted to cut this week? I think they are, right? I think the UK is likely going to cut. Bank of England, yep. So are they going to cut? No.
It says no.
So they're going to pause. Okay. Interesting. So no cut from the UK, big cut out of the ECB. Dollar's going to cut for the first time. New Zealand did cut by 25 basis points. Australia has not. And Switzerland is still at 1.25, but I'm curious if they cut by the end of the month. Bank of Japan, not supposed to do anything. I love this. It says around 0.25. Nobody knows. Nobody knows what the BOJ is going to do. But anyway, I think volatility is going to be the name of the game this week. So there's ways to do it. There's ways to play it. I think you could do something. Do you want to do anything on the volatility, man? Do you want to do anything on the VIX? Are you still holding long on the VIX?
Yeah.
October,
now,
right?
the VIX is, my call for October 2nd is at 168. I got it for 210.
Yep.
So I'm down. My open P&L is minus 20%. I was thinking about just taking another one, honestly.
Yeah.
If it's 168 right now, I might just grab a cheaper call on this because I do think volatility is going to pick up. If not this week, then next week.
Sure.
So,
yeah, I could see that.
Might as well.
Sure, I could see that.
Also, I'm looking at gold too.
Okay.
I think this is the sleeper trade. this thing just keeps moving higher, but then it has periods of long consolidation.
Mm-hmm.
But if we get a pullback on gold here, we come back down to like 25, 30. You know, might take a stab at it and we'll see. But I
So
was
something
in
like that.
gold and I didn't stay in.
Yeah.
Sorry.
You're looking at this
Yeah,
level to like kind of buy
black
that resistance. I got it. I like that.
Yeah.
I want to take a look at
I just didn't want to
silver.
chase price, but
Sure.
you said silver.
Well, yeah, because that's what. So gold makes me feel like I've got to chase, and I'd look. I'd love a pullback in gold. A pullback here is awesome. A deeper pullback is awesome. A deeper pullback is fantastic. Gold looks like it's more prime for that pullback. Versus if I look at silver, maybe. So here's what I was contemplating. If I looked at a bull put spread at this level or this level, and I just let it sit at a credit that I'm comfortable with, not now. I don't want to get filled now necessarily, but if price pulls back on silver, let me look at a price here at like 28 to 26 and just set in a pending order. I don't think that SI, if I traded silver futures, I don't think I'm going to get the price that I want. So if I went out to, let me see, I already have some expirations on silver futures. Let me just double check something. I don't want to overlap any expirations. So SI currently up around $4,500, $3,800. That is December and January expirations. Okay. And September and November. So I don't have anything in October for right now, which might be what I look to play. So I'm going to look at SI for October. And I have an October 28th that I can sprinkle in there. So what I'm going to do is on SI, I like this level below 26.
Is that
So
futures for silver?
This is futures, yes. /SI is your silver
SI?
futures. Yep.
Okay.
So if I did a $26 put for 0.058, that's about a $290 income play. Now, obviously, max loss is something I'm gonna have to create a spread with this to not take on a ton of risk. I could also roll this as a naked put. I could roll it. That's just a lot of buying power up front. So I think what I'm going to do here is, could I do, if I did a 26 by 25.50, I reduce the buying power a ton. I do have some potential risk. That's not good. Well, what's this? So that's 0.25. Trying to so the trick, I'm just like, how do I price this with a credit spread? I'd probably want to take like a 0.05 or even 0.25, get filled on 0.25. Let me see what this is. If I did 0.25, 0.25 would give me $12.50 in income. That'd be about a 1-to-1. I don't mind this trade here, Frank. I think I'm going to do this with a pending order. Let me see if I did something closer to the money. So if I do a 31.25 by 31, I can get 0.14, and that's an at the money. That's probably more realistic of what I should expect. So I'm going to do this with like a 0.14 fill. All right, I'm going to do this. So 0.13, 0.14 is at the money. Take this down to the 26 level that I like. 26, I think, is a pretty strong support level. So 26 by 25.75, try to get filled for 0.14. And that income play would be $700. That'd be a $700 profit for a $550 risk. It's only tying up about $277 in buying power. That gives me a chance to throw something in on silver, let price come to me, not have to force it, not have to take a tiny little credit. Because the other one was considering like a naked put and then like a hedge that's out of the money. But I'd rather just take an income trade. So, I mean, I'm long and I like silver to this direction. But if I buy calls and price just does this and it accumulates more, I'd rather set this as my line in the sand and give price time to work. I think there will be a good time for silver to, really, really rip to the upside. And I'm just hoping that when it does happen, I'm, obviously seeing it and taking the proper trades to make some good income plays on silver. But anyway, I'm going to take the trade 26 by 25.50. or 25.75. What was that? 25.75, and go after 0.140. It's just over a 1-to-1, which is fine. The buying power reduces it next to nothing, which I'm totally good with. And then price would have to fall. This is the nice thing. Price can fall a lot. And if that gets filled, awesome. And we'll see if it does. And realistically, maybe, let me see what a 0.1 is.
I can see it too, that initial reaction.
Yeah. Let me see. I'm going to try 0.13. So that'd be a 6. That's about 1-to-1. A 0.13 is a 1-to-1. I think that's fair. And also that is a nice support level at 26.15. I'm putting my strike a little bit lower than that. So I'm going to try that one. All right, dude. So this is 26 by 25.75. I'm going after a 0.13 credit fill, which with the multiplier in the futures market, that would be an income play of 650 if I'm right, and a risk of 600 if I'm wrong. I could look at it as a roll, but it's hard to roll credit spreads for credit. It's easy to roll for debits, but I don't really like doing that. So anyway, I like this trade. I'm going to take it. So SI, I don't have any October expiration, so that's why I like the trade. And I'll place this one here. So 0.13, and I'm going to throw this in everybody's account. Just another way to hopefully stack up a little bit more income on silver and also give it room to drop. All right, a few more accounts.
One more thing that I'd want to look at is oil.
Oil.
Do you have any, are you selling calls on futures oil contracts?
Selling calls? I'm not selling calls. I'm selling puts.
So you have bull put spreads on oil.
Yeah. Yep.
Okay.
I'll jump into my
How
tracker.
far out is that?
Give me 1 second. October 28th. That's a 26 by 25.75, 0.13 credit. So 650 max profit. And 600 risk. All right. This is pending. Okay, let's go to oil. So CL, I'm trading futures, so CL. What I did on this trade was I did a bull put spread. I got filled at the 65.50 sell put by 64.50 buy put. I got filled for 50 cents. That's a $500 profit for $500 risk. And all I need price to do is stay above 65.50. The expiration for me on CL, I think, was out to November. Yep, I did a November 15th expiration. I'm giving oil some room.
Nice. I bought OXY last week.
I saw that. I think you and I talked about that last week. I think I bought some Oxy as well. Sounds like I bought drugs. OXY. I bought OXY. Yeah,
we may need some if price goes down to 40.
Well, I mean, it's just gonna all the more reason to stay numb. If you're, I don't know what happened. If I saw you on Oxy, I think you'd just be in a coma.
I'm already really tired as it is.
All right. When you say 40, look, I like 43. I think I did a dollar cost average. I don't think I did any option trade on OXY. No, I just bought some shares at, because I had an assignment. That's right. We talked about this last week because I had the assignment and I still have the long put at 57.50. This is out to October. Now it's all coming back to me. OXY. Here it is. Yeah. So I was assigned the shares at $60 was the assignment. And I still have my hedge again. So I own it at 60, but I still have my hedge running right now, which is up like $2,200. So what I'm going to look for, and before this, I think that I'm going to use OXY for this. I'm going to try to repair the stock, but I don't want to close it out right now because I think there is vulnerability to the downside. That clearly, like this drop has been dramatic enough. Like we're coming back to this level here. So if price keeps going, I can still use my 57.50 put to, so from this level, I've got 57.50. So I can use that as my hedge and then still have profit. And I could own this maybe $1.50 or so off of wherever price is at. So if price does fall to 44 or even $40, I obviously have to time the long put. But I think I could repair the stock for, I mean, dude, if I get the stock ownership in the low 40s, I'd probably hold this thing to like a $50 strike price or $50 target and try, instead of making like, 50 cents to repair the trade, I'd probably look at making like $5 or $6 or $7 a share to make some pretty decent money. So I have until October, October 18th. So OXY is going to be on my radar for the next couple of weeks to monitor it. Let me see here. So if we get back to $60, I'm going to put this back up. And if we go down to, I'm going to put a 40. Let's go, I think like 44. I'll go 45 to be safe. $45 alert. And then into like $43. I think that's a good spot to look to protect. $43.
Okay.
Protect long put. So I currently have some shares, but not a ton. I mean, I've got 500 shares of OXY on my margin accounts. Yep. And then this is interesting. So I have 400 shares. This is such a wonky assignment. Like I got assigned 400 shares on this account with 160 by 57.50 remaining, and I still have the 5 long puts. So it's something I'm gonna have to monitor because there's a couple of extra pieces to it. This one was assigned 500 shares. There's my long put. This one, I own 18 shares because I wanted a dollar cost average into it. I bought it at what price? 57. I started to sprinkle in some support levels, so I'll buy another chunk. The 9151 should be assigned. It got assigned 300 shares. Like it was so uneven for some of these assignments, which is weird. And then 18 shares. Yeah, so that was dollar cost averaging. So I'm not worried about the dollar cost averaging accounts. I'm worried about the 3, 4, 500 shares that were assigned with that credit spread. I have to just kind of parcel that out in the next 30 days or so and figure out what I want to do with it. So it's easier if it goes down. Yeah, it's easier if it goes down for me because then I can just I will kind of more gladly take the profit on the long put, own the shares as low as possible, maybe $1 or so off the lows, and then try to repair it for maybe 50 cents to $1. If I repair it for $1, I'm at 500 shares, 300 shares, 400 shares. Flip it for a couple of bucks. That's a lot better than losing on a credit spread. But anything else you like in the oil space right now besides OXY?
No, I know Nick was selling puts on XOM, I think.
XOM. So that's Chevron, right?
Exxon Mobil.
Oh yeah, Chevron CVX. Yeah, say it. Yeah.
All
right.
Let me make sure I'm telling the truth here because I could be wrong.
So right now I kind of like a strangle on this one. We're right in the middle of this range. If I sell a put, sell a call, I wonder. It may not be like great credit, but I'm gonna check it really quickly. So above 124, and let's say below 100. Let me see if I can look at a strangle in XOM. XOM.
Well, how far out are you thinking?
I don't know. I'd probably do like a 45 to 60 day and just try to go for a profit target. We have earnings on the 25th. So if I did just out past the earnings play, try to collect a little bit more IV, we're at 38.7, which is kind of low. I wouldn't really want to be in this trade before that. I think what I do is if I took a trade at 46 days out, so I said 124, that's a 12 delta. Let's do a 16 delta here, and then a 12 delta. Okay, so I could do that strangle, 16 on the call side, and 101 on the put side. I'm going to go wide with this, 101 down to 90, and then 122 up to 135. Oops. I don't like that trade. Only getting 55 cents. Plus, it's a spread. You can't really roll it. You can't really do anything to roll it up or down. Never mind. I think the IV is just too low. It's not a, I don't know. It's not a good enough trade. But longer term, I mean, look, if somehow XOM came back down to $100, I think it's just a good trade to buy. You buy it at $100, it goes back to 120. I think we're in pretty good shape there. And I would hope that also buying ExxonMobil, if interested, is not just buying oil. This is also buying energy. Whether this energy is clean at some point with more, solar, wind, hydro, nuclear, I have no idea. Speaking of nuclear, I haven't looked at this in a while. This is URA.
Nuclear.
This is one of my So like the big energy push moving forward is uranium is used for nuclear energy. So this is huge in Europe. This could be like the next big energy wave where if we don't quite make the leap, full into solar, full into electric, full into whatever, I think nuclear energy is potentially way cleaner and way more cost effective in the future. But the demand for uranium right now is incredibly high. I'm quite surprised that uranium has been, as range bound as it was. So I'm just looking at this. If we get back to $20, I've got a couple of trades on uranium here. $20. I'll put here major support. So I have some puts. I'm willing to own some shares, and I'll put a little box at these lows. So that's a pretty good support zone if you ask me. I do have some exposure on URA right there, and positions. So currently I own some shares, and those were purchased around $25. So I'm upside down about what? Oh, I bought it at 27, my fault. I bought it at 27. I've got another entry at 18.25. I also have some option plays. I have a long call out to 2026. So I'm treating uranium like I'm treating bonds. I'm way out in the future here, trying to give myself like a year plus. And then I've got the $20, $19, $18 puts. So that's kind of how I'm loading up a position here where if it goes to 20 and finds support, I can have 20, 19, 18 for income. We come back to range highs, or I own some shares and we get back to the highs at 30 plus. I'm just wondering if we have this wave one, this is a corrective range to build some support. And then eventually if this does break, wave three is way higher towards like $45 to $50. But it's probably going to be a little supply and demand game of, there's this big paradigm shift into nuclear energy. All of a sudden everybody finds out that uranium is hard to find and it's super, super tough to procure it. And it's getting really expensive. And I don't know. So it's a play. It's one of many.
That's one thing to think about for uranium is that we may be shifting over to hydrogen. So we might not necessarily need this, just because uranium is very dangerous. So
it's true.
I don't know if that's I don't know if that's a huge concern right now, but maybe that's something to look into just in case.
Yeah, well, the infrastructure on nuclear energy too, it's like a lot of it's based on like 1960s, 1970s technology and buildings, and so the infrastructure it's being updated where it's, sure there's potential like Chernobyl again, where if something were to happen, it could be horrible and the fallout could be, detrimental. But if everything is upgraded to properly contain, properly have like clean nuclear energy, I don't know. Anyway, it's cheap enough where I could see nuclear energy being at least a phase as opposed to just going straight hydrogen. I don't know. I mean, anything's possible. But I don't know, man. If we go to hydrogen energy, great. Are we going to run hydrogen cars? Are they able to explode on impact and become like spontaneously combusted cars if something were to happen? Like,
yeah,
I think that's more of a new
hydrogen
technology.
would be like, I think it could be a worse explosion, but it also wouldn't. The other thing is like there wouldn't be any radiation from it.
True.
I guess.
Yeah.
Because uranium is highly radioactive. So
yeah.
But yeah.
Well, alternatives are
I
not a bad play, just because oil. I mean, oil supply and demand. I was reading a lot this morning. Like, there's a big futures inflation move happening in China right now. Like, pork futures are going to the roof, and then beef is way down. There's a pretty much a shortage with China pork. But there's a country that's still like this giant sleeping giant. I still don't know what China's ultimately going to end up doing. I just hope they step their game up and decide that at some point, technically, they're going to, help. They're going to help boost their economy like the U.S. has done pretty much forever, influenced by the Fed, of course, but we'll see. So might have to be a little bit more patient on China.
Yeah.
But energy-wise, I mean, oil, I'm not even confident. I mean, this is why I took a credit spread on CL, because I'm not even confident that oil is finding bottoms here. I mean, the seasonality of oil is usually it's cheaper by the time we go into the winter. So I could be playing the seasonal game that, we're here. I mean, I'd like to think that oil has the ability to go up. But if it does, I mean, one of the reasons we saw our CPI print 2.5 is we had shelter that's still trending lower. We had gas at the pump trending way lower. Oil's down 20+%. So, Frank, what does our CPI look like next month if oil is up to, 75 or $80? I don't think our CPI prints at
I
2.1,
imagine it'd be a
2.2.
little higher.
Yeah, I think it's going to be sticky again. So, I don't know. I almost wonder if it's intentional that the supply is trying to be aggressive, and the U.S. is producing just tons and tons of oil, trying to, so they can drive prices lower and just get those inflation prints to be better. But I listened to actually the podcast that I sent you, that YouTube video that I sent you this weekend. There's 3 waves of inflation, and we're essentially sitting right here. We're sitting here. So, I mean, is there a way to, get through it and see I mean, maybe when I say it's sitting here, maybe we're still on the downward move to finish out rounding this. But if we have another flare up in inflation, I mean, I think it gets a little scarier, of course, but everybody could be wrong, right? That's all this,
Do you think
like,
inflation gets worse?
well, I don't
Like
I
higher
mean,
than the double digits we saw?
that's what I was going to say, is define worse. It's like, I mean, 9.1, I feel like if we get back there again, I feel like the second wave is going to feel way worse than the first wave, because the first wave happened so fast, right? And it was supply chain issues and everything else that goes with it. So I think if we just have structurally higher inflation, we may still have, we might still have supply chains that are not falling apart at the seams. And so it may not feel the same way, but I just think that prices in general would be higher. But I don't know, man. I mean, I wonder where it's going to come from. I mean, the argument is that fiscal spending is going to be this big second wave of inflation. If we have tariffs, it's going to be what closes things off. We have more geopolitical tensions and more like global economy friction. So all these things can lead to higher inflation, but like, to what degree? I think you'd have to like choke off supply chains for inflation to be bad on paper, feel bad as a consumer and business, as opposed to we still have some flow in the supply chains. People can still get what they want, but just prices are more expensive because, routes are taken off, or you got to get it from a different country, a different source. But we're not there yet. I mean, I think this is, look, I'm not going to position my portfolio for that if it never happens, right? So, I mean, I think if I'm treating the inflation trade, I'm just going to treat it like a trade. I'm not tilting my portfolio towards heavy inflation. Look, I'm going to tilt my portfolio towards long term. The market's going to try to go higher, because if we debase the dollar, lose purchasing power, which we're going to continue to do, assets go higher. Somebody sent me this chart in my Discord this weekend. You've probably seen this chart, Frank. Let me see if I can find it here. Option stocks, Forex, rate cuts, Forex. Yeah, this chart right here. Check this out. This is, and Nick talked about this on the session. It was maybe a couple weeks ago. House pricing in gold versus US dollar. Okay. To buy a house in gold, it's been the same since 1900. As far as per ounce, an ounce of gold to buy a house, it's about the exact same. A dollar amount is exponentially higher. Debasing, loss of purchasing power, and that will continue to happen, right? The U.S. government right now is operating at these deep, aggressive, consistent fiscal deficits, where it takes about $2.50 of debt for us to make $1 of GDP growth. And that is like that's the path we're on until eventually we have like a fiscal crisis. I don't think we're there yet. We can clearly kick the can down the road for a long time. Ultimately, that's going to be, I don't know, at some point, it's probably going to be a 2008 all over again. But it's going to be the whole world's going to be involved as they were in 2008. And the reason why is everyone's drinking the same Kool-Aid, right? I mean, that's the unfortunate thing is everyone that's tied into debt in order to grow your economy and grow the global economy, it has to be debt, it has to be credit and leverage. I mean, at some point there's a reality check, but the problem is like everyone's doing the same thing. So I don't know. I'm telling you, just
Right.
if you watch that session, I think you and I
Yeah.
should talk about that. Like, just because it's super depressing. It's super depressing to think like, what do we do? But the reality is, what you do is you stay invested because assets ultimately go higher. Because if you're losing purchasing power in the dollar, stock market goes up. That is your best way to hedge against inflation right now is to have assets, right? If you don't own a house, if you don't own real estate, if you don't own land, if you don't own assets, you don't own physical gold and silver, you can still invest and trade it, and it it's paper money, but basically it's still worth something right now. So I just think this is crazy that you can buy a house for gold and it's the same ratio as what it was back a century ago, as opposed to the dollar. So, and the same thing is true on the gains of the S&P. The gains of the S&P, it goes higher because we've lost purchasing power and debased the dollar more. So anyway, that's about as maximalist as I get for alternatives. But just stay
That is
invested,
kind
man.
of sad.
It is sad, but the whole world's been going that direction for a long time, and it's a runaway train. And at some point it gets really bad, and at some point something breaks. And that's ultimately what that's why the Fed exists. Something's going to break, and they'll have to step in and fix it. But it's going to be the Fed with the ECB, with maybe Bank of China. Who knows? It could be everybody. But that might be the big reaction of you've got Western first world countries versus BRICS. And then who wins? Is it an entire economy based in commodities, or is it an entire economy based in credit and fiat and paper money that's debasing? So, but that's to be determined, and that's potentially years and years away. So does that do anything for us this week? Probably not. Just expect volatility this week.
Yeah. I mean, that's something that people have talked about for decades.
Exactly. And they
So-
talked about the death of the dollar for I look, man, the first newsletter I got on death of the dollar was probably back in 2008, 2009. It's been 15 years. Dollar's not dead. Still the world reserve currency, still the milkshake theory, still risk on, risk off. The Fed's still strongest, central bank in the land. I mean, it's going to take a long time for that to just go belly up. But the whole world is a part of it. But I'm looking forward to those conversations at some point, but hopefully we just do our best job to navigate it and actually, make some money along the way. So cool, man. Anything else for today? I think I'm good.
Actually, yeah, I do have one more question / idea
Okay.
on NVIDIA.
NVIDIA.
So they do a lot of business with China, correct?
Yes, they do.
Okay, so China's economy is slowing. There's concerns of, how they're just not really picking up this year.
Yep.
Their CEO, NVIDIA CEO, said there was incredible demand. But if China is going to be declining, they were kind of an explanation why oil was falling. Do you think the demand for chips might go down too as a result of China's economy slowing down?
Yeah, I think there's going to be, I think the demand will be, so let's say we had this like ravenous demand for chips. I can see it just doing this. Or we we settle back in and just kind of find a mature like demand, because the last couple of months we've seen Google, Microsoft, we've seen, the adage right now is it'd be more of a risk to not invest than it would be to be investing, even though it could be early in the game. The big question is, are you going to get return on investment for those expenditures? But I think there will be enough like global demand. It's not just all China. I mean, and I still don't think China is going to zero. It's like, I mean, seriously, I and this is another reason like contrarian can make a lot of money. You know, and the bad part about if you are contrarian, you do have to sit through these phases where it's like you are early, and it sucks to be early when you're wrong, right? And that was, I mean, it's a Big Short thing. It's like it's the same thing. I mean, look, I'm early in China, but I do think that if there's any stabilization and then China gets out of this funk that it's in, instead of it sounding like it's uninvestable and nobody should be invested in China, for me, my exposure is it's single digit percentages, you know, and it's like if I'm dead wrong, then I'm dead wrong. But if we have stability and we have a growth cycle ahead, or anything that's even if it's government assisted, where they just stabilize their sectors and stabilize real estate and stabilize tech and look for another growth cycle and actually add some fiscal spending like the US has done for the last 4 years, China can come back in a big way. I mean, the one thing that's been interesting is China was supposed to come out of COVID and lift the global economy because there was so much pent up demand that's there, but it just hasn't materialized. And the U.S. has kind of taken the reign, and the U.S. has carried the global economy through a lot of this like post COVID stuff. But I do think the U.S. is kind of peaking a little bit. I think the U.S. goes into like a sideways area, or maybe even a bit of a slowdown. I don't think a slowdown is necessarily full-on recession, but I do think the overall global economy benefits from a stable U.S. and a stable and stronger China. And without that, it's like I don't think one can just carry it all by itself. And if the U.S. is peaking and China's slowing, then I think that drags on everything. So to your question on NVIDIA, I mean, look at it this way, dude. Where do you want to buy it? I mean, I think NVIDIA still has a great head start. I think the demand is there. You look at companies like Intel and like Dell and these kind of legacy tech companies that are talking about, they recognize how NVIDIA is an absolute competitor, and they're years behind NVIDIA as far as catching up, but I believe that they will catch up. I believe that other companies will catch up, and I believe that NVIDIA's competitive advantage right now will cease in the next like 5 or 10 years. But it's still a good opportunity for, if we stabilize at, $100 or $90, or I've got levels I want to buy it at like $75 or $80, I'll buy NVIDIA. I'm not saying I'm holding on to it for the long term. I feel like my run in NVIDIA I've completely missed. I have not had NVIDIA in my portfolio other than options for the last couple of years. I've not been long NVIDIA. I haven't owned NVIDIA shares. So that's my fault, but I also wasn't chasing it. But I don't know how much lower it goes. I mean, this is now, what is it, still number 3 in the world? The amount of forced purchases in NVIDIA shares every single day and every single month and every single quarter, it's going to stay bid. Like NVIDIA won't just drop off the face of the earth. I don't know. I mean, I think that there's demand. I think that the stock is massive now. I think it's time for the stock to slow down and stop going exponential. And I'd like to buy it cheaper, So I'm not chasing NVIDIA, and I know that everybody has been, but I don't think NVIDIA is going to, 200 before we just come back in and maybe retest the same couple lows we've seen the last couple of months. So I just
don't see it. I don't see it going there this year, at least. It's going to be hard to justify all-time highs.
Agree. Well, what we've noticed is look at the trends in their earnings reports. That's been the biggest reason. Like the trends in, so the earnings report, yes, they beat by 5% and 4%, but let's look at revenue. It's mainly the revenue beats. So their revenue trend has been up, but the revenue trend went from this like 30% growth to then single digit growth. So it's still growing, it's still performing, it's still beating earnings, but the investors were like, you know what, this isn't as good anymore. Because NVIDIA was priced for perfection. NVIDIA had to beat by 25, 30% because that's what it was priced to do. So I think a little bit of consolidation, maybe just normalizes. A pullback in NVIDIA would be freaking awesome. I would gladly welcome a pullback. And I mean, to where? Well, if you take this low to this high, even if we pull back into here again or here again, take this as a low, this is a high. Let's say we get to like a 38 to 50% zone. That's on sale. Longer term investor, that's on sale to me. But I don't think there's any reason I'm trying to justify NVIDIA now. But there's ways to trade plenty of income plays on options. Speaking of, could I do something like this week on NVIDIA? Maybe. I'm sure the volatility is high enough. Here's an example. We're at 130. Could I do a 130 credit spread? Let's find out. NVIDIA has a 36.8 IV. It's going to be slow. It's going to be terrible credit. If I did something this week, we're right in the middle here, Frank. I don't think NVIDIA gets to the highs. I don't think it gets to the lows. I could sell that. I could sell that and probably make a couple of bucks on NVIDIA. I'd like to price that out actually with defined risk. Let's go 131 or
The
so.
IV is actually kind of bad this week.
It's low. It's really low. Yeah. Which also means that if I sell it now, I'm getting less bang for my buck as far as selling premium. I'd rather sell NVIDIA when it's like a 50, 60 IV, 70 IV than 36. But if I went out 60 days, go ahead.
Well, think about, since the IV is so low,
Uh-huh.
and we have FOMC this week,
Yeah.
and maybe some fallout of it next week. What if we looked at what buying calls or puts would cost?
Buying put
Because if the IV is low,
yeah,
it's a lower premium you're paying.
let's try this. Let me trade NVIDIA. I'm going to look at it first. I'm not just going to do it, but if I did sort of 116, if I did a 117 by 116, and then I sell against that, let me check my dailies. So I've got a weekly average of $13 and a daily at 620, $13 out a couple weeks. Let's go 117. Let's go to 130. That's 13 bucks. And then a 116 down to a 103. So I could pay $7.88 for what's a probability of maybe a $12 to $13 move. If we get back to, $13 gets me back towards these lows, just a little bit off those lows. $13 gets me this. So this is $15 to get to the highs, and this is $16 to get to the lows. If I did, let me go 15 up and 15 down. So I would pay $8 for NVIDIA to make a $15 move. I don't mind that trade. I think I could turn this into profit. I would need, so basically I need this. I need NVIDIA to try to go here or here by October 4th. That's it. So, could it work? Yes. Could it just be chop suey? We could be choppy, but I think there's enough interest to get something with NVIDIA to try to, justify a higher low. I don't know. Because I think that, if we have this big rip to the upside and the broader market's up and NVIDIA starts to go, that gets tested easy. That level, same thing. So IV's low enough that I'd almost rather be a buyer than a seller, but I almost want to be directionally neutral. So I think I'm going to take this trade, man. I give myself $15 to the downside, $15 to the upside. If I pay $8.40, I'm likely not going to get the full $15 credit, but I could certainly turn this into probably $10 or $11 of credit, make a couple bucks on NVIDIA. I'm going to take the trade. It's directionally neutral. It's just a volatility play. If I can cover the cost of my trade, the nice thing is on the week, we're expecting to see about a $13 move on the week. I'm only paying $8 for the debit. So probability wise, I can get money in the trade. So I'm going to take the trade. All right. So
say it's at like 9 or 10 tomorrow. What would you do? Would you get out?
No, I think I'm going to try to take this trade for like 10.50 or better. If I'm in for 8, let me see if I can get 8.45. 8.45. 8.45. Let me and also make sure I want to make sure I'm not overlapping any expirations. So NVIDIA, October 18th. All right, so I don't have the 4th. Good. So if I went to October 4th, this is going to be the expiration. So I'll go 8.45, 8.45 debit. And that is upside of 15, downside of 15. Yeah, I'm going to take the trade, dude. Let's see if I can get filled at 8.40 at the mid first. 8.40 mid, I'm willing to take 8.45. It should be liquid enough to get filled. Let's try this. There. Not filling at 8.40. I will go 8.45 to be, well, I'll pin it up there. 8.41. 8.43. I'm going to go 8.45. 8.45 filled. Cool. All right, dude, I'm in. Let me get these for the accounts.
Okay. I'm rooting for you.
845. You're rooting for me? Thanks, man. That always helps.
I'm actually going to fade your trade and
Do it.
sell an iron condor
Do it.
and bet that it won't move in 2 weeks.
Do it.
No.
You'll sell the iron condor for like 10 cents on the dollar if you do. So feel free to take that trade if you want it. All right. So I'm in NVIDIA. I'm going to box this in. So I'm looking for price to get up to either revisit this level or revisit this level. And I'm looking to see if we will have price. Where's my drawing tool at? This guy. Was in here somewhere. There it is. So there or there. All right, so copy that and jumping into Discord really quickly. This will be under the stocks options trades for my alerts. NVIDIA. I'm doing the 10-4 expiration. That was a 10-4. Yep. Okay.
What were the legs?
So I'm buying the 117 call, and then I'm selling the 132 call, and I'm buying the 116 put, and I'm selling the 101 put. So 8.45 debit, 845 max risk, and then I'm giving myself $1,500 bull bear max profit. I will likely protect at 1050 credit or higher. Yep. So if I get to 1050 or better, if it's this week, awesome. But I'll be looking to see if there's some type of move one way or the other that gets me a couple of bucks profit. If it does, that's my trade on NVIDIA. So there it is. Okay, man.
2 weeks to move. I think that's a good trade.
I think we get. I mean, we can get through. I mean, the next earnings print for NVIDIA, it may be in this chain here. The next earnings print, it's not showing up in the broker platform. I'm assuming it's going to be somewhere in like late October, November for the next earnings play. Let's find out. NVIDIA earnings calendar. Tuesday the 19th. So, I mean, this is not an earnings play, but this is, we get through the Fed, we get through non-farm payroll, we get through whatever volatility comes post-Fed, rate cuts, not rate cuts, we get through tech and semiconductor, interest, no interest. I don't know. I do expect September to continue to be volatile. I'm just going to try to take advantage of it. IV is cheap enough that I'm going to pay for it. I think the probability of getting a $12 to $13 move is high enough that that's why I'm taking the trade. It only cost me $8.45. So if we get a $12 or $13 move, I've given myself enough wiggle room to get $15 of upside that $12 or $13 move could give me, $11, $12 of credit. I'll take that profit. So that's ultimately my plan for NVIDIA.
Yeah, I like it.
Okay, man. I like it.
That
Frank's
sounds
like
good.
it. Frank likes it. Everyone likes it. That's all I trade for, Frank. I trade for you to like it. I need your endorsement on everything I do.
I know. I've talked you into a couple trades now.
Yep. We'll see if
I think I regret.
No. It's funny. The NDX trade that I took, it didn't get. It's not filled yet, so I'm pretty sure that's not going to take today. NDX, that little broken wing today, still trading at like 2 to 5 cents debit. That's likely not going to fill, which is fine. Everything else looks okay. So I think I'm good, man. Funny little side note for you. You can buy a silent keyboard, for your Jenga fingers.
Is it really that loud to you?
It's not like, I just think it's funny because it's just like the clickety clacks. It just sounds like you have an animal walking across your keyboard. But what's your microphone, by the way? Do you have like a Yeti mic? Yeah. You have a microphone that's like picking up everything.
No, I'm just using what's it called? My laptop for the audio.
Okay. That's why I use the headset so much, is like my dog could be on my lap. I don't think you can really hear me doing much of anything on my workstation. So I just use this because like noise canceling, and it just focuses on my voice as opposed to the peripheral noise. Like the Yeti that I have, it picks up everything. So
Gus is right on over here on the bed. It hasn't really done anything, which is surprising. He's just sleeping. So
that's good. Yep. Benji's over on the couch.
Usually he's up around like making noise and stuff, but
not today. He knew it was
maybe
all
tomorrow
business.
He will be.
Yep. Wait for the Fed day. Gus will be bouncing off the walls. He'll sense your excitement.
Yeah.
All right, cool. You good? Ready to wrap it up?
Yeah.
Okay.
I think we are good.
All right. Sounds good. Everybody, have a good rest of the day. We'll be back. Lots of streaming this week with A1 Trading. Mornings as usual. And then I believe we're going to have either a super long stream on Wednesday or we'll have like a specific FOMC in the afternoon. So stay tuned for plenty of trading, plenty of live sessions. But thanks for being with us. Have a good week. All right. See you, Frank. Thanks, man.
Thank you, guys.
Bye.
See ya.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.